Are we in the middle of an IPO meltdown? Is this the end for IPOs? Stay tuned. What's up, you guys? My name is Jose. Welcome back to the IPO Nerd, the best place to learn about new companies going public and how to invest in them. America's #1 IPO news channel. So today I want to look at this article. We're going to watch a video with CNBC that talks about the IPO market's drastic 2022 slowdown, guys. And what does it mean for banks, right? I know you've seen it out there. I've seen it myself. There's not many companies are filing to go public lately because of what happened in the last couple of months with companies that tried to go public and they just don't raise the amount that they expected to raise, and their share prices crash pretty much. So I can understand why some companies are a little skeptic about going public. Also stay tuned, because in the future I will be doing a Porsche IPO. They finally decided to go public in September. So with all that being said, I have not seen this video, guys. We're going to watch it together. I'm going to give you my opinion, my reaction to it. So make sure you drop a like, subscribe to the channel, and let's get right into it.
The IPO market is going through a big drought in 2022. Companies have only raised about $4.5 billion.
All right, so right there, I just want to point out, and I want to pause the video real quick right here so you can see how much money was raised back in 2021 when IPOs were popular. You see that? $142 billion, guys. So that is insane. And you can see all the way back to year 2013 that, you know, on average, you're looking at about maybe $30 billion per year. But now on 2021, that was insane. You can see that it was $142 million. So that's a big difference.
So far this year, that's down more than 95% from the same time last year, and puts us on pace for the slowest IPO market in 2 decades. And unfortunately,
the slowest IPO market in 2 decades, guys. That is insane. That is insane. Popularity is just going down. My channel, obviously, and unfortunately, is going to take a hit, right? But with your support, guys, I will continue to make this video. So let me know in the comments below.
It affects us directly here at the NASDAQ, because we get bacon when there's an IPO at the NASDAQ. And Adina was on, and there have been no IPOs and very few breakfasts in the morning for the staff. But you have a serious comment on this, BK. I mean, it is thin, slim pickings right now, is it not?
And he's talking about slim pickings. You don't have to tell me. I'm trying to find content to give you guys every single week, and I'm going to be bringing you more content more often. But the IPO listings is just not helping out.
For IPOs?
I mean, first of all, I had no idea you got bacon on IPO day. I would have been down there 5 days a week if I had known that.
We get bacon on IPO days.
Thanks for that.
On IPO days. Yeah. I don't know if I'm allowed to disclose that. Yeah.
I'll check my calendar for the next one. But I'll tell you what, you mentioned earlier, I mean, this also impacts the venture capital world too, because obviously, you know, this is the venture capital's exit plan. So if you don't have an exit plan, it really goes down the food chain.
Venture capitals are always looking to invest their money and, you know, double, triple it and all that. And IPOs is a good way to, you know, for venture capitalists to invest in new companies. There was a whole bunch of venture capitalists invested, unfortunately, in WeWork, and you know how that went. But the VCs are always looking for new companies going public to make that money. Always. It's one of their biggest things that they do, you know, VCs. And this could be, you know, investment banks and so forth. So is this going to hurt the banks? We'll find out.
And when you talk about money center banks, yeah, okay, fine, they're getting a little bit of boost from yields right now, but part of their valuation appeal was that they had this whole investment banking business around them. And if that is starting to falter and you start to look at a weaker economy, now I've got potentially some, you know, higher default rates or
Right here, guys, is what I was talking about yesterday. I don't know if you watched my video, go back and watch it. The Renaissance IPO ETF is down. This is a list of companies, right, IPOs that Renaissance Capital puts together. Only the biggest and, you know, the most liquid IPOs. And compared to the S&P 500, they double their losses. So this is something that is very concerning for all of us over here at IPO Nerd.
Concern of that. Investment banking is weak. The only thing you really got is higher interest rates, but the yield curve's flat. So I think it goes further into the investment banks, money center banks than anything else.
Is it lagging or leading, do you think? For what would you want to see to say that the market itself is improving? Usually a hot IPO market is always good for like when we're partying, when equities are going up. Do you think it's bottoming now, BK?
Well, I don't think so, because I actually think the market's got a little bit lower to go. So I would say it's a leading indicator of New York real estate. Going to have a lot fewer bankers out there.
All right, this is another interesting bar graph right here about the IPO pricings by year. You can see that the difference in price, guys, in 2021, look at this, $397 on average, right? That is, high prices. And then now we're looking at 54, which is like the lowest it's been in the last decade or so. So that is very, very concerning. People just don't want to pay premium prices anymore for IPOs.
Buying the big apartments.
Yeah, you cannot have a booming IPO market until the Fed stops hiking rates. I mean, that's to your point, right? You can't have the IPO market is correlated to risk markets doing well and being frothy.
Right.
Right. We don't have any clarity in that, and there's no timeline on when that will be back.
Right.
So that's a negative for a Morgan, a JP Morgan, and a Goldman.
And for those that think that the answer to inflation is increasing supply, you want investments, you want innovation, you want risk taking, so the Fed is really hurting what might be the solution to some of the issues that we have. So it's backwards.
Absolutely, guys, and raising interest rates makes people be a little bit more conservative, right? They don't want to invest into this big chances, that we call IPOs. So it's kind of like it's slowing down the economy, right? Because people don't want to invest. They don't want to borrow money or anything like that. They don't want to take higher risk. But at the same time, it's hurting these new companies, these IPOs, people from new companies from developing. So it's kind of like catch-22. That's what he was trying to say.
Or is it ass backwards? What can you say on cable? Either?
I think you just did. You covered all your bases.
Okay, everybody okay with that? But Guy, you're all right? I look to you for a lot of this stuff.
No, I'm fine. I think it was scintillating conversation right there, ended with that little vernacular that you threw in.
Kind of a Descartes. I think he coined that term, ass backwards.
All right, guys, so that was a pretty interesting video. I'm going to leave a link in the description below if you want to check it out. What do you guys think? What is causing this IPO meltdown or slowdown, right? A lot of people are scared right now to even file for IPO, because a lot of people don't even know if they're going to get what they're asking for the share prices and stuff like that. So some other great news going on right here, guys, today. Right, but we're not going to go over that. But like I said, I just want to jump on here real quick and go over that video real quick and give you guys my opinion. So what can we do to help these IPOs? Well, we can invest, right? We can find the ones that we like and invest in them. We can also, whenever there's fear, be greedy, right? So a lot of people are afraid right now to invest in these companies, right? So you can be greedy and grab them for a very good price. Most of the time for below $5. That's what I'm doing, right? And then in the future, hopefully they'll blow up. But anyway, guys, just my opinion. I'm not a financial advisor. This is not investing financial advice. So make sure you do your own research. And let me know what you guys think in the comments below. As always, guys, if you like this video, make sure you drop a like, subscribe to the channel. But more important than that, make sure you take care of yourselves. And I'll see you soon.
I bring up the pain, Rickosaurus the main. I make the market rain like acid rain. An investing channel you ever known, ya. I take your girl, your house, your money, and leave you broke, son.